Redefine is an economic and financial think tank advising policymakers both in the EU and globally. The leader of Redefine, Sony Kapoor, is voicing to build a green financial system in Europe and use the opportunities of financial reformation to shift to green. Mr. Kapoor argues that we will earn on investing our funds in environmentally sound solutions. Let's give a warm hand to Sony Kapoor.
Thank you for having me here. I'm going to start on a skeptical note. So, for the record, I was the president of something called the Schools Environmental Network in India in the 80s, way before environmentalism became fashionable, particularly in some parts of India I was in. So this demonstrates I do care about climate change. But for the rest of my talk, assume that I don't. I'm a climate skeptic. I don't believe that climate change is happening. I don't care. I couldn't care less. All I care about is profit, okay? So that's where I'm coming from for the rest of my talk. So, does it make sense to do some of the things that the previous speaker so eloquently spoke about? Where is he coming from? And I'm going to take off from where he left off. So here's the thing. I don't actually need to care about climate change to do some of the things he was talking about. All I need to know is that there are some other people who care, right? And this is the fundamental premise, and this is what we need to understand, because as long as we are dependent on the community of people who care about climate change, who care about grandchildren, who are nice, who are ethical, who believe in corporate social responsibility and the whole acronym space, we are basically all screwed. So what we need to understand is that there's a very large constituency of people out there who are not in this room for a reason, which is that they don't care or they have more important things to think about. So the question is, how do we make those people think about some of the actions that are being discussed here today? How do we make them tweak their behavior in a manner that those of you who do believe in climate change, those of you who do want to leave a decent planet for your kids, are actually able to do so? So, well, where does its story start? So let's look at the ideas. This morning's sessions were mostly focused on technology, that technology is progressing, and I trained initially as an engineer. I believe firmly in the onward march of technology. It's been the greatest single biggest creator of wealth, not the financial system, just for the record. And so that talk is one side, right? So all of that is going on. But are things, as they stand today, profitable from the perspective of someone who only cares about short-term profit? Can I make money investing in renewable energy? Should I be making investments in coal today if all I care about is profit? So let's look at the landscape one faces. So first is the question of, everybody talks about everything that needs to be done, all the renewable energy that needs to be done. Jeremy spoke about people using kerosene lamps. I just came back. I've been doing some work advising the Indian government more recently. Such a high percentage of population in India doesn't even have basic access to energy, right? So in environments such as Norway, this is a question of climate change. In environments such as India and in sub-Saharan Africa, there is a separate question, which is that of basic access to energy, just any sort of form of light, if nothing else. And how do the two relate to each other? So here's what you need to consider. That the total stock of financial assets in the world today is about 150 trillion euros, okay? So that's trillion with a T. The kinds of figures that are being spoken about, so the EU has estimated that it's going to cost between 150 to 250 billion every year to meet its 2020 program commitments. There are other estimates on how much green investments are needed in order to meet our obligations under various climate treaties, in order to make sure that we stay under the current under the trajectory of 2 degrees. So all those figures, be it 500 billion or every year or 1 trillion, all of those pale in significance compared to the 150 trillion euros of assets that exist, that financial assets. So basically, what I'm saying is there's more than enough money to make those investments happen, right? And as Jeremy pointed out, there is about 650 billion of investments of capital expenditure already going on in the so-called dirty investment universe, which is coal, oil, gas, other carbon-intensive assets. So there's that money which can also be diverted, right? So the first proposition is there is actually enough money to make a proper green transition happen. There is enough money out there to make sure that our children are able to benefit from a planet that hasn't choked on itself, okay? So the question is how to convince people who sit on that money to make it happen. Let's start with Norway. What country better to demonstrate the big contradiction that exists between what we profess to believe and how we act? Like it or not, your prosperity is partly built on at the cost of the future of some of our kids, I guess. And there is, of course, the other element, which is about, is it the oil producer's responsibility where the emissions are counted, or is it where they're consumed that they should be counted? What contribution does Norway make to climate change? Without going into any morality of that, because clearly those moral arguments have not worked, they have failed, we look simply at the financial side of things, right? So I moved to Norway in 2007. I looked at the portfolio of the Sovereign Wealth Fund, and out of the 10 largest investments, 5 were in oil companies. And for me, coming from a financial sector background, that just looks silly. And I said so. And of course, that kind of fell on deaf ears. But when all the new money that you are earning every single year is coming from the sale of oil and gas, right? You are essentially doubling up your risk, because if you fast forward to 2025, the fund is expected to be 1.5 trillion US dollars, double of what it is now, with all of the 750 billion coming from the sale of oil and gas. So your true exposure, pure financial exposure to the sale of oil and gas is more than 50% of your portfolio. It is not what the government says as 10% or 12% or 13%. And what you instantly need to do is what I'm hoping the Labour Party, after years in power of saying it did not need to do, has started to say, which is instantly sell all oil, gas, coal, carbon-intensive investments. But that's not enough, because that simply removes some of the doubling up of the risk, right? You need to actively move beyond that to find investments that will rise in value when that future revenue falls, provided some climate change action is taken. And you actively need to seek to make those green investments. But what's very interesting about the political climate here today is that finally, after 15 years of existence of the fund, that recognition seems to have been coming about. Now, of course, the devil is in the detail, and all of you here who are Norwegians have a personal responsibility to make sure that these words are actually converted into action, because this actually has a huge potential catalytic effect. So what's going on in the world today? What's going on is that everybody's complaining that there isn't enough long-term capital around, right? So all the politicians constantly complain about it. So in a world where there isn't enough long-term capital around, the one source of long-term capital that is growing is sovereign wealth funds. Oil and gas-driven sovereign wealth funds. There's roughly about 5 trillion of that. And if you are a fund that gets all the new money from the sale of oil and gas, irrespective of whether you believe in climate change or not, if you think some other people do, you have a natural risk-return calculation to make, which is you instantly need to sell all such investments and actively seek renewable energy. For those of you who are seeking sources of money, sources of capital to make those renewable energy investments, to make the green transition in Europe, to look at how energy access in sub-Saharan Africa, in India, can be compatible with tackling climate change. Here is your first port of call: oil and gas-driven sovereign wealth funds. And what Norway does, especially if the messaging is right, others will follow. There is already, I've given you $5 trillion. I think I can just walk away now. There's nothing more to do. Anyways, the important thing is, as I said, you don't need to personally believe in climate change. All you need to do is that there are some people who believe in it, that there is a possibility climate action will be taken. It doesn't have to be confirmed. In the same way that rating agencies look at countries and they calculate political risk, it's not that a coup will happen in, let's say, Malawi, but there's a possibility that it may. The financial sector exists exactly for the purpose of trying to foresee what the future may hold and what it means in terms of current investments, right? And what other sector can better exemplify this than the future where all leading politicians, all global bodies have said they will take action on climate change. And to basically say that risk is zero, as Jeremy was saying, is actually a complete derogation of duty. Now, what's quite interesting is, in order to make sure that the financial sector understands this, there are initiatives, some of which I'm involved with now, which are cropping up around the world to start suing investors, to start suing pension funds, to convert what is a possibility of a rise in carbon price, what is a possibility of a restriction in carbon emissions, into real legal risk for investors today. And if, as things go forward, if the oil fund does divest all oil, gas, and coal investments, if other investors recognize this is a real risk, investors continue to ignore it, they will do this at their own peril. I was just 2 weeks back at a big investor conference in Amsterdam. All the large investors in the world were there, including the Norwegian Sovereign Wealth Fund. And the discussion started annoying me because there was a huge discussion talking about how the politicians had been printing money, how central banks are printing money, the interest rates are at a record low, how there is too much sovereign debt, there's too much debt being issued, how investors were having a really, really hard time trying to make money. And I completely changed what I was going to say. And I started by saying, guys, it is all of you sitting in this room. It's nobody else who is responsible for the present situation. Because when these risks were building up, when the banks were taking the sorts of risks that led to the financial crisis, you were asleep on the wheel. Because it is those investors, it is in fact you and I, Norwegian taxpayers, Norwegian pension holders, Swedish pension holders, everybody, who are the eventual owners of exactly all of these firms, who were equally responsible, including trade unions, many of which have representatives on large funds, for being asleep on the job when the financial risks were building up, which then broke, and now we are all paying the price. And these same people are complaining, and that exact same phenomenon is happening today on climate risks. Everybody is asleep on the job, and somebody needs to wake up. And you, with your special responsibility, with your excess financial risk, Norway is the country today with the biggest gap between real risk, real exposure to the global financial system and actual expertise on the global financial system. The biggest gap between exposure to these sorts of risks and actually the number of people who care in Norway about these risks. It is your money. It is your future. You need to care. Anyway, so what can we do at a realistic level? So in 2009, we started working with financial regulators in the EU and suggested that they introduce a carbon stress test for all fiduciary investors. All investors who manage other people's money should be forced to say what will happen to their portfolio if carbon prices go up to 30 or 50. They don't have to do anything, but they just need to say what will happen. And once they have said something will happen, they will need to act, because if they don't, that is a derogation of duty. They can be sued, and that is already a start. And this dovetails very neatly with the Carbon Tracker initiative. What else can be done? What's very interesting about the comparison between green and dirty investments is that the longer time horizon you look at, the more attractive green investments look. So over a 5-year horizon, gas turbine is more profitable to an investor. Over a 10-year horizon, a wind turbine becomes more profitable. Over a 15-year horizon, it becomes even more profitable. So any reforms that can be made to make sure that, be it corporate CEOs or fund managers, look at a longer-term time horizon, which is exactly in consonance with what the politicians are saying in terms of the financial regulatory agenda, will instantly help tilt the landscape towards green investments. What we need to do is make sure, think like investors, think like bank managers, think short-term, and think the landscape one faces. And that is how to make policy. You need to make sure that policy means that I, looking selfishly at maximizing my return on my portfolio, am able to change my behavior in a way that is consistent with what people in this room care about. Until and unless we do that, we are not going to make this work. Now, very simple conclusion of this is steps that increase the perceived riskiness of dirty investments. The Carbon Tracker Initiative, carbon stress tests, the environmental authorities behaving like central banks. What do central banks do? They give a benchmark idea of what they expect future interest rates to be. Interest rates will never be that, but that becomes the market anchor. Similarly, if policymakers were simply to produce a benchmark and say, this is what we expect the carbon price in 2020 to be, that will become the market standard for pricing. So anything that helps increase the riskiness, the perceived riskiness in the financial decision-making of dirty investments would be a significant changer of behavior. Anything that helps reduce the perceived riskiness of green investments, wherein a more stable pricing regime would be a good idea, demonstration projects, some small guarantees where they're needed today, would already be a big move in this direction. Anything that helps stabilize what the future may look like from an investor point of view would help tilt the landscape. What we are sitting at is a cusp of an opportunity where the dreams of those tens of millions of people without access to energy, the fact that we have not in developing countries moved to lock in a carbon-intensive future yet, the fact that there are real financial returns possible there, the fact that there is so much money sloshing around in the system being put to unproductive use, if only we can focus on financial intermediation and make sure that the two are connected. And here, what we said with the Norwegian Sovereign Wealth Fund, in order to increase the returns to Norwegian citizens and reduce the risks, you need to invest significantly more in poor developing countries, particularly in green energy investments, to avoid locking in a carbon-intensive future and to generate higher returns, being able to lock in on some of those higher growths, is exactly the kind of slam dunk opportunities that are ready to be exploited there. Let me just finish there. I noticed I've exceeded my time, but most of these ideas can be captured. I'll just tweet about them if you want to have a look. I didn't want to go into the details, but anybody who tells you that green investments on current terms are not profitable is not telling you the truth. Anybody who tells you that we don't have enough money to have the luxury of tackling climate change is not telling you the truth. Anybody who tells you that it's only the community who cares about climate change, if only we had slowly expand the community, if only enough people care about social responsibility and their grandchildren, we will make it work, is not telling you the truth. As a hard-nosed financial investor, the truth today is it makes complete perfect sense for me to make green investments. Make me do so. And that is your challenge. The last thing I will end up on is you have large pension funds and everybody else complaining about not being able to make money. You have your pension funds in the US, etc., buying German and US government bonds that give negative real rates of return. At the same time, you have a massive untapped potential, changing bulbs in your house, changing insulation in poor UK insulation house. All of these can potentially deliver financial returns of more than 30, 40, 50% a year. At a time your money is getting returns on -1, -2%. There are macroeconomically significant opportunities to get returns of +50%, +30% that are being unused. And this is where financial intermediation is failing. And this is where policy making and leading behavior by the likes of the Norwegian Sovereign Wealth Fund can step in a way that is good for you, good for your pockets, good for me as a financier, and will make sure that we leave our kids a world that is not choking on itself. Thank you very much.